So today is Friday, December 30th, 2022, and it's the last active trading day of the year. And of course, it's another red day. 2022 has been an absolutely brutal year. The S&P is down over 20%. The QQQ, which historically has fantastic returns, is down almost 34%. VGT is a information technology sector ETF, and this is down 31%. The Vanguard Russell 1000 Growth Index is down 30.5%. And a lot of individual names that did fantastic in 2020, 2022 are now down big. So Teladoc down 75% this year. Palantir Technologies is another one of these names, down 65%. The fintech Square is down 61.7%. PayPal is down big too. Yeah, year to date, PayPal is down 63%. And even a conservative dividend growth ETF like SCHD is still negative, down about 7% for the past year. And just to put this in a better visual format, here is a heat map of the S&P 500 over 2022. And yeah, the first thing you're gonna notice is all the deep red. We do have some exceptions. So Berkshire, Warren Buffett's company, is positive for the year, up 2.3%. We do have some green in the health technology. So J&J up 3.5%, AbbVie up 19%, Merck & Co. This is one of the biggest holdings in SCHD, and it's up nearly 45%. I'm also noticing some green here in defense companies, Raytheon, Lockheed Martin, up 36%. But the big winners, of course, in 2022 were the energy companies, ExxonMobil, Chevron, Oxy Petroleum. But when it comes to all the red, it's not just small companies. So Amazon, one of the largest companies in the entire world, went down 50% in just 1 year. And it's all the big tech names. Apple is down 27%, Google about 40%, Microsoft 28%. And the damage gets worse. So Nvidia had a terrible year, down 51%, even Broadcom down 16%. And Broadcom financially is a very strong and healthy company. Netflix is another one of those names, down 50%. Oh yeah, and Meta down 65% this year. So yeah, I think you guys get the point. 2022 was a hard year for investors with very few places to hide. And to help us put this into better perspective, I came across this post on Reddit. So you're looking at all the 20+% declines in the S&P 500 since the end of World War II. And 2022 is this red line right here. And the first thing to note is that there's a lot of declines of more than 20%, so this is not a rare thing. I also noticed that most of these declines ultimately end in this zone right here. So anywhere from 20 to, say, 35% decline. This is true for 2020, 1987, 1961, 66, the current correction, 1956, which is kind of right there, and 1968. There's only really 3 exceptions here that the market crashed more than this, and that was 07, 73, and 2000. Now, each one of these corrections was unique and had its own economic reasons behind it. And the current one, as I'm sure we're all aware, is due to historically high inflation dating back to the 1980s. Inflation peaked back in June at a rate of 9.1%. That is crazy. Now, we do have data that this battle against inflation might be turning in our favor. So you're currently looking at lumber prices. You guys might remember that back during the pandemic, lumber spiked to a crazy high level. But you guys might not realize that now the prices come all the way back down to pre-pandemic levels. So if you look at this through the lens of causing inflation throughout the greater economy, we can see a huge spike here, but since then it has come sharply back down. But of course, this isn't just with lumber. So this chart is showing the cost of shipping containers. And again, we had this massive historical spike after the pandemic, but since then it has come back down. So to me, this indicates that the fight against inflation is beginning to bear some fruit. And here's yet another example with raw materials. This is copper, and we see here a huge spike in price followed by a sharp decline. But this is all throughout the economy, including in the stock market, as we're all aware. We can see a very similar trend here, a massive spike during the pandemic, which was inflationary, and now a big correction. And the fact that we're seeing this progress on inflation, and we're not seeing prices kind of stagnate at this high level or even increasing, that makes me hopeful that this coming recession everybody's afraid of might not pan out to be so severe. And this is my logic behind that. So, of course, in 2021, 2022, inflation skyrocketed, and that prompted the Fed to aggressively raise interest rates. In fact, they raised rates faster than any other point in modern history. This, as intended, had a very negative effect on the stock market, making it go down or deflate in price over this past year. But the good news is raising rates also affected the demand for raw materials and helped to bring the demand back in line with the capabilities of the supply chains. So my expectation here is that following this data, the coming months of inflation should continue to trend downward. And if this does pan out and inflation becomes tame and under control, then the Fed no longer has to increase rates so aggressively. That means the stock market will chill out, finally reach some kind of a bottom equilibrium, and ultimately we can have some kind of a soft landing in the economy, best case scenario. Because to me, that is the silver lining in this upcoming recession. It is man-made, and thus it's kind of easy, easy in quotation marks, to fix. At least when you compare it back to other times like '08, when due to subprime mortgages, people were losing their homes. That's a much bigger systemic issue in the economy, but regardless, hopefully 2023 brings a better year for us investors. We definitely don't want to go through another year of what we just had. But let me know your thoughts in the comments below. If you guys enjoyed, I appreciate a like, subscribing, and I'll see you guys next year.